What's up, guys? Capital Allocation here, back with another market update. So today I'm going to give you an insight into countries, currencies, cryptos, and commodities. So we're going to look at some charts here, try to figure out where the market stands and where the money is flowing currently. So the first chart here, S&P 500. We've been up the last 6 days here. These are Heikin-Ashi candles, by the way, 50 moving average and 2 standard deviation channel here. So we've been in an uptrend, short to intermediate term, within a longer term downtrend here. If we continue this trend, we would expect this to roll over and have a few down days. However, we are above this 50 moving average, so this is a key support level. We'll see if we break down. I assume we're going to at least retest this 50, and we'll see which way this breaks here. Next, we're going to look at the 10-year yield. I don't know why this is 3.34. Really, the high was 3.4% on the 10-year. An incredibly large red candle here breaking down, indicating this is a fear trade. So money is going into bonds, the yield is decreasing, and money is moving out of the market into what they would really consider a safety trade. However, if you listen to Peter Schiff, this is far from a safety trade. This is really something I'm trying to get out of currently, but I'm glad in the meantime it's holding. Well, we can accumulate some assets here, guys. So simply a fear trade here. Put to call ratio, .88, so a little bit more calls in the market here. Interestingly, I'm a little bit surprised by that. Could indicate some institutional buying. The VIX here at 23, so a little bit elevated. Again, you can see this 2 standard deviation channel. I'm experimenting with different indicators. This is an indicator I'm liking more and more. Sometimes I'll use the Ichimoku cloud, which I also like. But here with this 2 standard deviation channel, every time you can see it hits the top of this channel. Same with the bottom. When this thing gets oversold, this channel tends to indicate a bottom oftentimes. So the VIX here, just chopping around basically. A lot of down days in a row, so I wouldn't be surprised to see some consolidation, potentially a reversal to the upside. But again, anything can happen, and nowadays the media is driving the markets on a day-to-day basis, which makes it a little bit more fast-paced, difficult in the short term to predict, but that gives us an advantage as investors over traders. Traders also can have an advantage, but a lot of times the banks can get in there pre-market, make moves before you can. So as investors, you can take advantage of these short-term swings. These are the markets selling off, not individual securities. So what I'm seeing right now is tech stocks taking a beating, overpriced stocks taking a beating, the indexes, the ETFs going down in general. However, commodity stocks, value stocks, dividend paying stocks, which are already relatively cheap before this drop, are now getting in the range, which to me looks very interesting. However, I do see the risk that the market could drop further, which, obviously the beta is not really the risk, the volatility is not the risk, but psychologically it's difficult to maintain positions with a large downside. So I do see value in the market in certain sectors here, but psychologically, it's a difficult trade when you're seeing a downtrend. But that's why you get paid when you go against the trend here. So here, the Chinese market bottomed back here in March. It's been trending up ever since. Here we're testing this 50 moving average. Not sure which way this is going to break, but in general, if you had your money in the Chinese market, you would be relatively better than in the S&P 500 over the last 3 to 4 months. So something I'm watching very closely, and looking at Alibaba, they bought a company called Lazada. This company is expanding throughout Southeast Asia. I think their supply chain is second to none. And with the Belt and Road, the only issue I see here is I was an owner of Russian stocks, and essentially those stocks were frozen, and I could definitely see a future where Chinese stocks could be frozen from the US markets as well. Hard to predict. I prefer to look at the overall emerging markets to reduce that risk, of which China is the largest percentage of the emerging markets ETF. But China is something I'm watching very, very closely, as it's really hard to tell what's going on there with these lockdowns. How severe are they? And is the economy really going to flourish or not? Japan was an interesting one. So the last several days have been up in Japan. Surprisingly, with the depreciation of the yen, that's a little bit surprising. But again, here, just running along this 50 moving average, look how nice these technicals are. Just testing, rejected, rejected. Will we get another rejection? Definitely a possibility here. And again, with China, we're getting a lot of information, and there tends to be a lot of focus on China. But what I think people are missing, and I'm starting to look at more and more, here's the Indian market, all right? So again, testing this 50 moving average, not as clean, but we have had some kind of fake outs with following rejection here. A lot of volume here coming into the Indian market. Hard to say here. This MACD looks like it could be rolling over, but overall, these markets a little bit expensive, low dividend yield here. I think there are some treasures within this market. There's actually a coal company in India that is very interesting, and I'm going to try to get some more information with something like a 10% dividend yield. But again, I think people are not looking at what is going to soon be the largest country in the world by population, with a people who, I don't know if you work with any people from India, but man, there is some talent coming out of India. And I think also, if you look at the GDP per capita, it's like something crazy, like less than $2,000. The level of growth in India, I think there's a reason maybe that it's not talked about. But starting to look more and more into this, I was kind of trapped by that whole thought about China distracting everyone's attention. But again, I think India undervalued overall. A lot of growth potential, a lot of, I hate to use the term human capital, but that does happen to be true. All right, switching gears over to the UK. This ETF has about a 3.17, if I'm not mistaken, percent dividend yield here. hitting the bottom of this 2 standard deviation channel, bouncing up. A little bit of a Wyckoff distribution, still a downtrend. So there's still a lot of pressure here, but we are closer to the bottom of this channel here. So in the very short to lower medium term, it does look like we're maybe going to test this 50 again. So I see a little bit of upside. I do see more value in the UK market for sure at the moment compared to at least the S&P. Also, the British pound has taken a beating, and I'll get to some currencies in a second if you guys stick around. Another one I'm looking at, Brazil here. Again, you can see when you hit the top of this channel, it's pretty tough to go much above this with normal markets unless you have some type of Dogecoin meme stock, something like that. A little bit of consolidation here, crossover on the MACD. Coming back from oversold territory here on the RSI. So we will see the dividend yield something crazy. I think maybe even above 8% at the moment. This is one I think there's definitely value not only in the entire market, but there are some steel stocks, energy companies, utility companies with 12-15% dividend yield. I think there's definitely value in the Brazilian market here. So I'm not sure which way this is going to break, but if it breaks down further, this would be, for me personally, an accumulation point. Gold, if you had been in gold, even though we're in a downtrend, you'd still be doing relatively well compared to the market here. Again, you can see this 2 standard deviation channel double topping here below the channel here. So to me, this has some upside, at least in the short term. I think we're going to test some of these shorter term moving average. If you look at the MACD, clear crossover coming out of oversold. It's absurd people are going into bonds as a safe haven when every other week governments around the world, none more than the US, issuing multi-billion-dollar packages to do whatever they say is politically advantageous at the moment, none of which makes any logical sense if you have 2 brain cells. But it's basically a debt trap. It's the US version of what's been happening with the World Bank and the IMF for a very, very long time. Side note, if you look at the Central Bank of Russia and you look at other central banks, I think Bank of England, the Fed, all linked with the Bank of International Settlements. Go look at the member banks of the international settlements. With these so-called wars, I'm looking at the bankers, and they're all in the same club, in my opinion, what's going on. So anyway, side note, don't censor me, YouTube here. Anyway, silver, yeah, nothing to see here. Again, bottom of this channel. You can see what happens when we hit the top. So statistically, probability, this looks cheap to me. It hasn't been this cheap in a few years here. Going to be a lot of demand with renewable technologies, solar. It's crazy how much silver is needed unless they can substitute somehow, which may happen. But in general, this is looking decent to me. Let me know what you guys think. I think we're at least in for a short-term bounce. If this goes lower, this is getting to me pretty darn cheap. I really don't see this going below 14 or 15. That would be pushing it. I couldn't imagine it getting that low. Crude oil here, a little bit of relief. Gas pressures uh, coming down a little bit. Um, so here at $95 a barrel from the high of 130, still in the downtrend. With the economy going in shambles and interest rates rising, we've seen this story before. Right now we're holding together, and there's still, I think, that hope phase. But I think as reality sets in, um, we are going to see this continue along, I think, with the economy. To me, this is kind of a gauge of the overall health of the economy. Same with copper, Dr. Copper here. Below this 2 standard deviation channel, so I think we're due for a bounce. If this thing goes lower, I would definitely think that's a buying opportunity here. So anyway, indicator of the economy, I think they got to be joking if they're really going to pretend this is going to go down, because any drop here, in my opinion, is going to be very temporary. I think here's the yen. This may be why the Japanese market, at least in part, is going up here. But we're still in an overall downtrend. Japan has, I think, the highest, at least one of the highest, if not the highest, debt to GDP ratio. They've been kicking the can down the road for a long time, and it's finally starting to show in their currency. And in fact, I don't know if it's necessarily starting to show, or are they intentionally devaluing their currency in order to sell more, mostly cars, some TVs, and whatnot. That seems to be the case, which, as an American, I'm perfectly fine with that. Devalue your currency. I will buy all the Japanese products. I love Japanese products, especially their cars, and I will buy those all day. So at least we're in a good place overseas in that respect. British pound getting beat up. They have, if I can check my chart here, an 85% debt to GDP ratio. The US here is up at 134, so we've been completely robbed. It's really sad to see what's happened. But the US now, debt to GDP ratio is up at 134%. Well, Britain is at 85%. Personally, I'm thinking this currency looks very interesting to me right now. And again, it's in a downtrend, so I'd like to see the technicals confirm my fundamental perspective. But with those debt to GDP ratios and with the amount that the United States is spending, this is something I'm considering personally to diversify into for my personal portfolio. And Bitcoin, what to me is becoming more and more interesting here, although I think the powers that be do not want this, and the taxes, at least in the US, are pretty absurd, making it more and more difficult, making gold more and more attractive compared to Bitcoin. But I do appreciate both. Will this be a bottom? I don't know. We're about to test this 50 moving average. I think we break down further from here personally, just with the way things are going. But I think long term, maybe it won't be Bitcoin. There's a lot of cryptos I personally like better than Bitcoin from a fundamental use case perspective. But I do understand the rationale for Bitcoin specifically. I don't know that now's the time to buy. At least I can say I do know now is not the time to buy for me. If you think differently, if there's something I'm missing here, let me know. But I think when the Fed starts printing again, maybe I think it's going to be later than people expect. I think they're going to kind of freeze their balance sheet, drag this out for a few years, and then we'll inevitably come in some manufactured crisis 7 years in the future during the Shemitah year, or maybe 2030, and that will be the time to buy. But we'll see. Corn, I know we're getting into some boring stuff here, but looking at commodities generally, with this whole inflation debate, I find it interesting because the media won't stop talking about inflation. However, the subconscious expectation of inflation actually can cause people to spend money more quickly, therefore stimulating the economy. And these people are known to give forward guidance and manipulate populations for this very reason. But if we're looking at crude oil, copper, here is corn, I see inflation coming down. Actually, I not necessarily coming down, but at least stabilizing where we're at, if not coming down. As far clearly with asset prices, we've seen that in the markets, and I've seen more availability in real estate. So with higher interest rates, so we will see. But personally, I am the person who cried wolf as far as inflation. I've been worried about inflation for a long time, and looking at these different commodities, I'm starting to second guess that opinion and thinking that actually inflation is not going to be as it has the last couple of years. I think that was a one-time kind of price increase. I think it will happen again. But I think we're stabilizing to some degree. Cattle futures, again, the whole meat issue here, but this 2 standard deviation channel calling a top here. Nothing too much on the MACD, did cross over, but looking a little shaky here. So I just see a consolidation range. So nothing too interesting there. Uranium coming back to test this 50 in a downtrend. I think people got ahead of themselves here because of what's happened with uranium in the past. There's, I think, probably somewhat of a recency bias, although it's not that recent, but people know what has happened in the past. I see a continuation maybe of a downtrend here. Probably a little slower, not as severe. I think there will be a time for this, but personally do not think the time is now with the testing of this 50 moving average. MACD looking weak here, RSI, all of that. Last chart of the day here, rare earth metals. Nice little pop recently. Again, that standard deviation channel. Love this thing. One of my favorite indicators lately. But yeah, still in a downtrend. Looking to find a bottom here. Always a difficult prospect to try and perfectly time the bottom. But looking from more of a fundamental perspective as well. So let me know if there's anything I'm missing here. I wish I could have gotten into more cryptos with Thinkorswim here. I don't have as many available, but in the future, I'd like to look more into the crypto space, look into more exotic countries and currencies, and just try to find where the safest place is for capital to flow in a crazy, crazy time. So let me know if this helped. Leave a comment below. Thank you guys. Take care, and I will see you in the next one.